Yo guys, welcome back to another market breakdown video. I hope everyone's had a great week, and today is Friday the 15th of November. So in this video I'll be covering a few setups that as a community we were looking at, and also I'll take a look at some setups that are developing nicely with price action entering some key areas for potentially next week as well. So as always guys, it's best to conduct your analysis on the higher timeframes first. And I cannot stress how important it is to keep a close track on the daily time frame in particular. We really should be only checking the weekly at the end of the week once the candle has closed. And as most of you know, once we've established our directional bias, we look to execute a position on the 1 hour or the 15-minute upon the correct confirmation, which is usually built from the higher time frame confluences. So starting off with the dollar index, the DXY, following from this double bottom here, price impulsively made its way back up into the 61.8% and 98.45, which you can see is quite a significant level of structure. Now, if we look at the candlestick formations here, we can identify an evening star formation. We've also got these wicks to the high, suggesting that the price attempted to push higher, and then the bears came back in, printing these candlesticks with the wicks to the upside. So that's suggesting that there is a lot of selling pressure at this level. And if we translate this across to Euro USD, we can see the same sort of picture from an inverse perspective. Now, I highlighted a few weeks ago that ever since this impulsive move here, I was just treating this next move as simply a retracement, despite having taken out this previous high here, this structure high here, and of course breaking above the daily 50 EMA. I cannot ignore the impulsive nature of this price action, so therefore I was only treating this as a correction. Now, it does appear that the bears could step back in here. And this evening star formation is also a nice confluence to suggest that there could be some further downside going into next week as well. As a community, we have a few live USD pairs running, and the bias is very much US dollar weakness. So if we do see that further momentum to the downside, that will of course really help the pairs that we're running at the moment, which as a whole, we've been planning these moves for some time. So it would be really great to see that further momentum to the downside. And if we have a look at Euro USD, as I say, we can see the inverse perspective, and everything's gearing up for potential upside on Euro USD. So following from this double top, we saw a fairly deep retracement, breaking below this low here, technically invalidating the bullish sequence. But of course, at the back of my mind, I was just simply treating this as a deeper retracement. Now, price has retraced into psychological key level 1.100. which also aligns with the 61.8% as well. So we've got two key areas of confluence here. Now, if we move to the 4-hour time frame, you can see that we've got this descending wedge into a key level and the 61.8%. Therefore, we are anticipating that this could be the formation of a new higher low. When we see price getting squeezed like this, this is an indication that the sellers are really running out of momentum. And then you can see these notable wicks to the downside. So we've got these low test wicks out of a psychological key level, multiple wick rejections of the 61.8% as well. And then we had this bullish engulfing candlestick taking out hours and hours and hours of price action, breaking above the descending trend line. And if we go to the daily time frame, you can see that we've got a morning star formation as well. So this is looking fantastic for upside. Now, we've actually taken a position as a community at the bottom here, and I really want to see how price behaves around the daily 50. And of course, that also goes for the same on the DXY as well. So I really want to see how price behaves around the daily 50. If we can break the daily 50 on the DXY, you can see that we're a little bit further away on Euro USD. But again, if we break the 50 on the DXY, this could encourage this to continue pushing higher. And we obviously need enough momentum to break above these highs here. But I'm really liking what I see here. This is a fantastic opportunity to buy this currency pair. There's huge potential to the upside, and this could be a really nice swing trade for the next week or so. So US dollar Swiss franc. Now, US dollar Swiss franc printed a new high. Now, there was a short-term buy because price printed a new high. And then obviously we saw that sell-off. We saw the safe haven buying come back in. And if we reflect that onto gold as well, we can see that gold hit a major structure point and started to retrace, which I'll cover. So the retracements across the safe havens, i.e. the buying back into the safe havens, made sense. And you can see that we broke below the daily 50, and we've now interacted with the 78.6, and price has stopped. So again, that will make sense as well. Now, I'm not suggesting that price is going to print a new high low here and continue pushing to the upside. My directional bias overall is dollar weakness. So obviously I want to see Euro USD move to the upside. I want to see DXY move to the downside, and this could potentially continue moving to the downside. But the reason why price has stopped is because we've hit the 78.6. So not really much to say about this pair. I'm more interested in upside for Euro USD at the moment. And of course, we can kind of correlate the two just to give ourselves a better idea of the next direction for either currency pair. So yeah, I'm going to sit on my hands with this one for a minute, and obviously we have a position running on Euro USD. So USD CAD, we've actually taken a short position from up here, and we were anticipating this move for a few days, if not a few weeks. Now, there was actually an opportunity to take this short last week, which I covered in the previous video. And having broken above the daily 50, the structure point, and the 50% Fibonacci as well, we were anticipating that price could continue pushing to the upside, and then we'd identified this area of high value, which was in our favored golden pocket region. Now, price didn't quite hit the 78.6. We had this ascending trend line, which price could have used as a retest. We have this descending trend line, which again, third touch retest, and also the structure point around 1.3250 to 1.3260. So multiple confluences here on the higher time frames. And if we drop down to the 4 hour, you can see here that we had this ascending wedge, rising wedge, whatever you want to call it. We could see that price was increasingly becoming squeezed, and this very corrective ascending nature to this price action. So we could see multiple rejections of the 71%, and again, this ascending nature, suggesting that the bulls are really running out of steam. And if we drop down to the 1 hour, we can see that price printed this double top here. Since broken below the 1 hour 50, it's come back up to retest it. So if you're not already in this, then I would recommend waiting for a break and a retest of this ascending trend line. Price will probably have broken the 4 hour 50 by then. And for the more conservative traders, that would be your final confirmation. That would really suggest that there is a change of direction happening, and then you can still capitalize on a decent move to the downside, targeting low, and then of course the minus 27% fib extension as well. USD JPY, now this is something that we've been calling for a while, and price rejected the daily 50 and this ascending trend line for the third touch, had this last drive up into the high and rejected 61.8% on this larger fib taken from this high to this low, and also the weekly 50 EMA and this descending trend line. So the other thing that was quite obvious was that price was in this rising wedge formation. And again, rising wedge formation is a bearish reversal pattern. And you can also see that we've got this level of structure around here. So that all made sense. Now, if we drop down to the 4 hour, you can see that once price had rejected these areas of multiple confluences on the higher time frames, price came down to the 4 hour 50, popped back up, created a new lower high, which was also the 61.8%. And these beautiful bearish candlesticks suggested that that was our final confirmation needed in order to take a short position. So again, building our case on the higher time frames, building that confidence, moving down to the lower time frames, again looking for more confluences on the lower time frames, we could see that the buyers had exhausted, failure to make a new high, and this was the area of execution for us. So that was a fantastic trade. And again, if some of you are still holding this, then I still think there's a lot of potential to the downside. We could see that the buyers did try to step back in here. We had these low wick rejections. But since we've broken below this ascending trend line, and now we're coming back up to retest it as well. So coming up to retest the 4 hour 50 and the ascending trend line. And also, if we really break this down, you can see that we've got this level of structure here. And if we fib this from the last significant high to the low, that's also the 50% as well. So that's a really nice re-entry there, nice little scaling for those that are not in this. Again, we've built our case on the higher time frames. This is a perfect opportunity to re-enter this position, again, if you're not already in this. So even if you took a short position from here, stop loss above the 4 hour 50 in the trend line and the 50% fib. So, you could have a conservative stop loss, say 18 pips, targeting the low, almost 3%, targeting the minus 27%, would give you a nice 4.3%. Downside confluence is obviously the structure point as well to the minus 27%. So, that's just a nice little 4% trade there, just on the scaling. And again, if you were to hold that, then you could target the next low, which would be 12%. And if you were going to target the start of the correction, which would be 104.50, something like that, then you've got almost a 24% trade, which is just ridiculous. So I think there's still lots of downside potential on this. The intradays are breaking down beautifully. We've got this break of the ascending, and if we go back to the daily quickly, the only thing that we need to consider is that prices hit the daily 50 and the 78.6, taken from A to B. So that's the only thing to consider. And of course, the fact that price is actually making higher highs and higher lows in the daily time frame. So it does come with a risk, this trade, which is why entering up here was probably the highest area of probability for execution. And now we've hit the daily 50 and the 78.6. It's only natural that we could have expected some form of reaction, which we've got. So you have to ask yourself, is this just a retracement for a continuation to the downside? Or is this the formation of a new high low for price to continue moving to the upside? Now, the fact that we're now back below the weekly 50, we've rejected that descending trend line, we've rejected the 61.8% on the higher time frames. Again, building a case of evidence on the higher time frames does suggest that this could continue to roll over. We've got this rising wedge formation, bearish reversal pattern. So this is just all of the questions that you have to ask yourself when you're trading. We've hit the 78.6, we've hit the daily 50. We can expect some form of a reaction here. So if you were holding from the top, this would be an area that you would start to remove some profit. And then you have to weigh up the risk. Okay, am I prepared to re-enter? We've had the break of the ascending trend line. The higher time frames are looking fantastic. Technically, we're still bullish in the daily sequence because we've failed to take out this low here. So do you wait for price to actually break below this low here? So price to come down, invalidate the daily bullish sequence, breaking below the daily 50 in this previous low here, and then entering upon a retrace like so. So obviously that would be the safest area of execution, because then you've got that confirmation from the daily time frame that price has printed a new low. Or for those that are a bit more aggressive, you could enter on this nice little scale, in which obviously I've just covered. So for me, further downside is still expected on USD JPY. And of course, if we do see that US dollar weakness going into next week, then we can expect this to continue breaking down and moving to the downside. So GBP USD, still very corrective. Obviously, we've had 3-4 weeks now of very corrective price action. And we do have this nice bull flag developing, and we're slowly moving into an area of interest. Now, as you can see, we've broken above the descending trend line, we've broken above the weekly 50 EMA, and we've broken above this level of structure as well, and we've printed a new high. So therefore, our directional bias on the higher time frames is bullish. So therefore, we should only be looking for reasons to buy this for the long term. Now, the 38.2% lines up beautifully with the weekly 50 EMA and this level of structure. So I'm very interested in seeing how price behaves around this area, and to see if we get some form of rejections on the lower time frames for us to take a position here. We've got multiple confluences on the higher time frames around 1.2700. So mark this on your chart. This is a key area for this pair. It still needs some development, and if we have a look at the daily, we can also see that the daily 50 would line up with the weekly 50 as well. So this is a really interesting area for me. This is an area of high value, guys. So get this marked on your charts, and this could be one for next week. If we do see that further retracement just into this area here, this would be a fantastic area of execution for us. Now, of course, we can't rule out the fact that it may just go from here. If we see that dollar weakness really kick in, then we may see this pop to the upside. But the pound generally has been very flat. It's been quite weak, and I think it may stay like that for the next few weeks until we see further developments with the elections and Brexit and everything else. So, I mean, technically this is looking pretty good if we do have this further retracement into this area of high value. And if you're a part of the community, you'll know exactly how to execute a position. Then this could be a fantastic trade for, the rest of November, or even going into December. And we could actually break above 1.300 before the new year. So keep this on your watch list. It might not happen next week, it might happen the week after, but we are slowly entering an area of high value. So Aussie dollar, US dollar. Now, for anyone that was selling the Aussie dollar, you've done very well this week. the market reacted quite strongly to the employment data. And you can see that we've now hit the 61.8%, taken from A to B. So this larger fib move, price has hit the 61.8%. Now I'm aware that it's broken below the daily 50. I'm aware it's broken below the ascending trend line. And I'm also aware that it's broken below this previous low here. So technically on the daily, we've invalidated the bullish sequence, which would kind of make sense because we had this descending trend line, which price rejected, had these multiple wicks to the high here. So I guess it kind of did indicate that there was some selling sensitivity around this area. But I was expecting this third touch, this daily 50. I was expecting a bounce from here. So, the fact that price broke below that is absolutely fine. We could just be seeing a deeper retracement here. And I like the fact that we've rejected the 61.8% to the T. So we could actually come back up. So if we move to the 4 hour, what we could see here is price move back up to the 4 hour 50 and this trend line, fib that like so, come back up to the 50%, 4 hour 50 and this ascending trend line, retrace into this area and then have one last move to the downside. We could actually move into the golden pocket, and that would also line up with the minus 27%. So fibs in fibs, guys, if we plot the 78.6, you can also see that the last area of validation for us for this fib also lines up with the minus 27%. So that could be a move for next week. Obviously, we are anticipating that US dollar weakness, so we really need an even weaker Aussie dollar for this setup to work. Now, I'm kind of just speculating a little bit here, going offhand, because I'm just analysing what I see, but that kind of makes sense for a short-term move going into next week. So let's see how the US dollar develops. But I think we could start to see this push up into this area of value. But again, what's interesting here is that fibs doing their job as per usual. We've rejected the 61.8% and now we're retracing back into this area of other confluences here as well. Aussie CAD. Aussie CAD, I was looking at this area here. Now, the higher time frames on this pair are looking absolutely great. Now, I had this area marked out on my charts here, which was this level of structure, the daily 50, and also that was a fib as well. And I was looking for some deceleration and reasons to take this long around this area, which was around 0.900. We actually pierced through the level of structure in the daily 50. And again, like Aussie dollar, US dollar, we've hit the 61.8%. Now we can see here that we're starting to push higher. I cannot ignore the weight of this bearish engulfing as well. There's a lot of momentum there, like across all of the Aussie dollar currency pairs. Now, I need to see further developments on this pair, but I still favour upside. Now, we cannot ignore these low test rejections. And if we look at the weekly, again, I covered this in last week's video. We are incredibly low in the chart. We are at yearly lows. Now, we cannot also ignore the power of this bullish engulfing candlestick. And we cannot ignore the fact that we've got these beautiful weekly low test rejections as well. So when we have all of this information in the back of our minds and we look at the daily, yes, although this looks very bearish and we could actually see this trickle down a little bit lower, that's not impossible. But from the higher time frame perspective, i.e. the weekly, in the back of my mind, I'm only really looking for reasons to buy this long term. So again, Aussie dollar CAD, still favour upside for this. Still looking for reasons to buy it. I do need to see a little bit more development. If we go down to the 4 hour, you can see the price is now building a base off the 61.8%. So for me to start building a case here, for me to gain interest in taking this long, I'd really need to see a break above the 4 hour 50, print a new high low, and then I'd be really interested in looking for reasons to buy this as a longer term swing trade. Euro Aussie, we've got this descending trend line. Price has interacted with the 61.8% again. We've pierced through the daily 50, but we can see that price is really decelerating at this area around 1.6250. So again, I think there could be an opportunity to short this. Price is really struggling around this area here, around 1.600. So we've kind of got this double bottom here, and this is quite impulsive. So I'm not going to jump into this. Of course, we do really need to see some Aussie dollar strength coming back in for this setup to work. But again, the technicals are being respected. We've got the 61.8% rejection, and we've got this descending trend line rejection as well. So let's see. Again, not jumping into this. This could be one for next week. So EN, EN again, this is looking much better than EA. We've had this huge bearish engulfing candlestick, absolute monster of a candlestick. Rejected this level of structure, which makes sense. We've come back up for a retest. If we look at the 4 hour, 4 hours looking great. Retracement into the 4 hour 50, rejection at the 61.8%. And we've come back up, tapping the 50% as well, and this level of structure, which is also psychological level of 1.7300. So, this is looking great for a short. Now it's Friday, and personally, I don't like to enter positions too close to the market close unless they're absolutely too good to miss. Now, this is a really nice setup, and again, there's a huge amount of momentum in this candlestick here, so the sellers are really in control. Now, you could take a short position here, like so. Stops above the 50 EMA, and I mean, you really need to have like a 55 pip stop, maybe even a 60 pip stop, something like that. Targeting the low just about validates the trade. We always look for a minimum of a 1 to 2 to the low or the high. And to the minus 27%, you've got over 3%. So that just about qualifies for a trade. Of course, if we do see a further retest and you start looking at the lower time frames, like the 15-minute, and you did see price creep back up to the 50% again, then of course you can have a tighter stop. But again, technicals playing out beautifully. This is looking really nice, and expecting further downside on EN going into next week. Euro JPY pierced through this level of structure and the daily 50, and now we're interacting with this next level of structure, which is the 50%, and you can see that we've rejected it. Now, I really want to see how this daily candle closes. If we close back above the daily 50 and we print some form of like a morning star formation, then that could be a really nice confirmation. Again, we'll drop down to the lower time frames, and if you're a part of the community, you'll know how to enter. This could be one for next week, guys, so definitely keep this on your watch list. If we break back below this level of structure, then we're going to come down for a third touch into the golden pocket, which would be awesome, and it'll just give us a higher risk reward. So this is developing really nicely, and this is definitely one for the watch list going into next week. So Aussie Yen, I did actually highlight this in the weekly watchlist PDF that was sent out on Monday. And what I do, guys, is every weekend I break down each pair that's entering high probability areas so that I can get everyone prepared for the week ahead. So if you're not digesting that information that I send out on a Monday, if you're not going through those pairs, then I highly recommend you do, because I'm always putting in the hours over the weekend to make sure that you guys are fully prepared for the week ahead. So this was a pair that was in that weekly watch list, and I highlighted the fact that we were very corrective entering this area of confluences, which was 75.50. We had the 50% fib taken from this high to this low, which was a larger fib, which looks great on the weekly time frame. We had this level of structure and this descending trend line. So this ascending nature of this correction really took my interest up into this area of confluences, and then I was expecting a break, which we got. Now, as you can see, again, we've hit the 61.8%, that holy fib level, the 61.8%, what a beauty. And also we've had a third touch of this ascending trend line, coming back up to retest the daily 50. So the question is, will we break or bounce from here? Now, again, sit on your hands with this one for a minute, because we could actually see a bounce from here and further upside. Again, that all depends on the strength of the Aussie dollar, or if we get a break of this ascending trend line, then simply sell it on the retest. Obviously, that's a short-term play because we haven't got a huge amount of room to the downside. We're very low in the chart here, but again, remain fluid. If we get a break, look for the retest to sell. And again, if we break back above the daily 50 and the 4-hour 50, then we can look for reasons to buy this. Of course, you just have to be aware of these upside confluences as well. So for those that are a little bit more conservative, you might want to wait for a break above this high here, confirm a new higher high, a break above the descending trend line, and then a retest back into this level of structure, and then you can look to enter upon the retest. New Zealand dollar CAD is another pair that's looking fantastic on the daily time frame. You can see that we've really stalled around this level of structure, which is a huge level of support for this pair. Again, if we have a look at the weekly, we're at yearly lows. So price hadn't actually been this low since August 2015. So again, entering a key area of value, and we've got these low test rejections into this level of support. Again, if we go to the daily, you can see that we are discreetly making higher lows on the daily time frame. We broke above the daily 50, we retraced into this level of structure, and the 61.8%, I actually took a short position from here, and we had this huge bullish engulfing candlestick breaking back above the daily 50, and now you can see that we're just stalling. We've actually failed to break above this high here. So if we look at the 4-hour, just to break this down for you guys, so obviously following from the higher time frame confirmation, which I've just broken down for you, you could see after this impulsive move, we had this descending wedge into this area of high value. So rejecting the structure and the golden pocket, you can see this lovely low test rejection. I entered on the 15-minute on a wick rejection, which is very aggressive, but it just suits my style of trading. And we printed a new high on the 4-hour, confirmation of a new higher low, and then bang. So beautiful trade, expecting further upside from this. You know, again, if we have a look at the weekly and the daily, we're in these high value areas. These are great levels to be buying from, huge amounts of upside potential. So this is definitely a pair that should be on your watch list going into next week. If we actually fib this level from A to B, we may actually come down into the 61.8%, or in fact, this would be the 50% as well. So for those of you that are more conservative, you might want to wait for a break above these highs, because obviously we've got this double top scenario at the moment. So wait for a break above these highs, confirmation of a new higher high, and then look for the retracement and then enter on the retracement. GBP AUD, not much to say really. I mean, obviously following from that Aussie dollar weakness, this is obviously pushed to the upside. We've not had a particularly weaker pound, but that noticeably weaker Aussie dollar has shot this to the upside. Now, I was actually waiting for price just to move a little bit lower, which I've been calling for weeks and weeks, into 1.8500. This would have been a fantastic trade if we just saw price trickle down a little bit lower. We didn't get that. The market doesn't have to do what you want it to do. So I missed this trade, which is absolutely fine. And I'm just seeing how price develops now. It does look like we could actually retrace a little bit here and then have one last move to the upside. Now, whether or not we create this double top scenario or we actually continue pushing higher is unknown at the moment. So I'm going to sit on my hands with GA. Now, if you do get this double top scenario, there could be a really nice sell from up here. But that is quite an aggressive trade, because basically you're only going on a confluence of a double top. So we really need to see further developments of this. But if we do get this pullback into this region here, there could be a short-term buy. Again, just beware that we may get this double top scenario here as well. So there's a few pairs there, guys, which are entering areas of high value and looking fantastic from the higher time frames, looking super clean. In particular, Kiwi CAD, Aussie CAD, and GBP USD. Obviously, we're running a few short positions at the moment, so don't overexpose yourself. And as things progress and develop, for those of you that are in the community, I'll keep you guys updated, and I wish you all a fantastic weekend.